Good evening, everyone. Hope you're doing well. This is your typical Smart Money Sundays episode. However, obviously, it is Monday, and typically when we have bank holidays on Monday, I kind of postpone this standing video, but nevertheless wanted to kind of put together my thoughts and perspective on kind of what we're expecting in the week ahead, the short week ahead in the markets. And so starting off on EURUSD, this one is quite interesting, and I personally can kind of make a case for both perspectives in terms of bullish bearish. And in terms of the bearish perspective, you could look at this price action as obviously higher high, higher low. The higher high trade into demand, right, have the reaction, but demand fails, flips to supply, hence the reaction off of this area last week. All right, but at the same time, I could also make the case for this high here not having traded really into anything, right, which we wanted obviously higher on the prior Smart Money Sundays episode. It might have been 2 weeks ago. And so therefore treating this as a draw on liquidity inducement prior to the real mitigation, right? So I could make a case, right, for price to, after having traded into supply here, to kind of spill over and just create a new lower low. Right, but I could also make the case for potentially, right, one more kind of drive to the upside up into, right, our prior supply, right, this full body candlestick that dug into liquidity, right, while simultaneously taking out this old intermediate high and then seeing price spill over. Right, so almost like an A into B into C retracement into real supply, real premium for continuation. All right, and so that's why we need to kind of, it's always good to step back and think about things from multiple perspectives so you don't get kind of married to one particular bias, and therefore you prepare yourself to react and adapt. All right, and so, stepping back again, higher time frame, right, we've been talking about this for a while. Right, we've been wanting price to kind of trade down into this demand on the monthly time frame. Right, and there's really nothing kind of stopping price until we get there. So ultimately, the bias is still to the downside, higher time frame. It's just a matter of if we're going to be seeing that kind of higher time frame, A into B into C retracement, right, pushing up higher into this area of price first and foremost, running out these highs. All right, so kind of looking at this 1 hour level as a potential area of interest, right? Looking at this lower time frame starting to consolidate and chop around, but this kind of 1 hour level as a potential point of interest, right? For maybe seeing price run the high, run the low, and then run the high again. Once we get that kind of break of structure, then we take it long, right? Alternatively, we could run out that low as well, make a quick run, and then break structure to the upside and continuation. All right, I'm not going to be placing limits, but I will be on the lookout for a potential buy to sell to buy in some manner, right, for that push higher, because I really do want to see price trade up into the higher time frame level. Right now, if we don't get that manipulation, that sell to buy in the break of structure, right, then probably means that price is breaking lower and going to go ahead and run out this old low. All right, so we have the perspectives, we're prepared, we react and adapt according to the applicable time and price. All right, GBPUUSD, very similar, very similar. All right, this thing obviously higher time frame, has been very bearish. We have had a significant extension to the upside. We have our potential draw on liquidity within these highs here and that old 90-minute level, which I guess I can show very quickly. Right, the old 90-minute level right here, that was never mitigated, never accounted for. In fact, we kind of engineered these relative equal highs, descending liquidity prior to, right, this up close. All right, so again, very high probability, or some probability, right, that this thing creates another leg to the upside, right? So looking at this as one drive retracement, extended second drive, kind of chopping, right, retracement, and then the final third drive cycle, ultimately running out these highs and trading up into that true supply that was never accounted for. All right, you can kind of pull a fib on this as well. Getting that nice golden pocket, 6178.6 retracement area, and that negative 27 aligns beautifully with these old highs. All right, so it's just a matter of kind of getting down into this deeper discount and looking for that sell to buy according to time and price as taught in our Smart Money courses. VIP members, you're well aware. All right, AUDUSD. This one's obviously made a new low in the higher time frame. The Aussie and New Zealand dollar are obviously weaker relative to the dollar compared to the likes of the euro and Great British Pound, right? We're creating a new lower low in the higher time frames. All right, and so I kind of like this. Again, this is that same logic, the same model that I talk about all the time, just in a different kind of perspective, right? Again, if you follow, you know we like to see the consolidation, right? With the sell model, we want to see the run on the low first, the run on the high, and then the break lower, right? Establishing that new lower low in price, right? And so now naturally we're looking for a retracement and continuation. Simple as that. All right, and for me, this is really demand created here, right? With the push higher, demand created, we react with this candlestick here, right? This little bullish candlestick. There's your reaction from demand, right? But we bust through, we fail, right? So that flips to supply, and that ought to be a nice premium. If I had to guess, 61.71, right? There you have it, 61.78.6 golden pocket, nice level of premium for continuations, negative 27 down into 6,200. Nice alignment with our higher time frame objective, right? That being this weekly down close candle right here, right? The inefficiency that was created. All right, so pretty good alignment there. Lots of possibility, lots of potential for another drive cycle into the lows, a simple continuation. All right, and the same obviously applies to the Kiwi dollar. Same type of model, right? You have the high, okay, you have the lows here, run the lows first, run the high, break lower, pull back, continuation. Pull back premium, continuation. Right, so kind of looking at that same area as AU, right? Kind of demand here, little reaction, breakthrough. Demand flips to supply. Right, getting back up into this nice level of premium. Don't need to overcomplicate it, guys. Don't need to get the most perfect entry. As long as you have the risk to reward intact, at least a 1 to 3, right, and all of your rules are met, then take the risk. All right. So that's in U, again, same retracement, continuation into that negative 27. USDCAD. Right, obviously, we caught this one down here at this perfect wick entry, right, on the 8-hour time frame. And, you know, we're still in this, ridden it up 880 pips thus far. But we do have some relative equal highs here, right? And I think that's going to be the immediate draw on liquidity. So simply looking at this as kind of engineer of liquidity, run it, right? Sell to buy, break higher, following this lower time frame wave play. All right, so I'm liking this price action in here for a lower time frame retracement and simple continuation higher, targeting the old highs. All right, moving on, USDJPY. Okay, it's another one that we're still in from a few weeks ago, right? Obviously off this level that was handed out, right? And we're approaching this old high. Now, what I'd like to see on this one is that we leave this old high intact, right? Almost create equal highs here, right? And see that kind of manipulation, that strong push lower, right? And the fact that we haven't taken out this high gives us confidence and conviction behind the fact that we should continue to buy this thing, right? Until at least this old high is run out, right? Because if you think about it logically, retail traders see a massive sell-off come into the market. Where do they naturally place their stop losses? Where do they naturally place their buy stops? Right there, all right? So that's a nice little tidbit to kind of think about when you see moves like this, especially in an enduring uptrend like we've seen on USDJPY. Oftentimes these massive moves are simply shaking up the market for continuations higher. All right, so this is the level still intact on the 1 hour time frame, that nice little doji candle, to see if we can get a deeper discount for that continuation higher. All right, on to some of these other yen pairs that really haven't changed much. All right, Swiss franc, Japanese yen, nice sell side liquidity that's resting beneath these lows. We still have our higher time frame area of manipulation here, right, that I really like to see accounted for before a more significant push lower. All right, and so in this case, possibly what we see is kind of maybe a run on the low first, a quick move higher, maybe up into the significant premium, and then another run lower to take out this old low here. That's what I'd like to see on this one, and ultimately we have some pretty clean lows resting at 140, 140 to target. All right, it's a little different than USDJPY. Obviously, the UJ is more dollar dominant as opposed to some of these other yen crosses. All right, so again, looking for that kind of run on the low, run on the high, break lower. That's the sell model that we like to see. Same deal here on CADJPY. All right, we still have that sell side liquidity intact on this one as well. Get rid of this stuff. All right, still have the sell side liquidity as a nice attractive price point, right? Magnetizing price into that pool, and then obviously our area of demand at kind of 103.50 that ran out, ascending liquidity traded into demand. So I think we can dig lower into this kind of imbalance here, right? It's just a matter of getting up into more of a premium, right? A premium before we see that next move lower. All right, and you can even kind of look at this as a potential reverse Fibonacci situation, right, where we see that A into B into C into that negative 27, right, and then spill over from there. All right, and that puts us in nice alignment with obviously our up close, all right, our supply here where we have the same model, run the low, run the high, break lower. All right, nice up close candle right here, institutional sponsorship. All right, let's see if we can't dig higher up into here, and then at the right time of day execute London Open or New York Open for that follow through to the downside. All right, GJ, nothing much to talk about other than the fact that obviously this level was given out not only to VIP members immediately, but also for free. I think Nate talked about it on the live session last week. Beautiful play here on GJ, right from this supply kind of wick entry that traded right on down into demand, 315 pips. It's consolidating now. So I don't really see anything in terms of the here and now, but just wanted to highlight yet another opportunity that we kind of generously give out week in and week out for you guys to pair with your own analysis. All right, Euro GBP, nothing's really changed. It's a very slow market at the moment, just kind of consolidating, chopping. Looks very corrective in nature. What I'd like to see is a strong push higher up into supply. This is the true level. And then another significant push lower, right? Kind of completing a cycle of 1 drive retracement, 2 drive retracement, 3 drives. All right, so that's the level here on EG. Make sure you mark that off. EURNZD, obviously bullish at the moment. I kind of like to see where we have a run on liquidity, right? We have that inefficient move, and then we kind of just maintain almost like a pencil formation, right? And kind of engineer the liquidity to be ultimately run out, right? Sharp move lower, running all of this stuff out before we see that push higher again, right? So the level on this I'm looking at is 30-minute time frame, right? Nice potential area of demand. You can see the inefficiency created. All right, so let's see if we can get a kind of sharp sell-off here, right? And then the continuation higher, targeting this old high. GBPNZD. Talked about this one last week. I'm just going to reiterate it very quickly. Obviously, we had a very massive liquidation right, with this massive sell-off here, right? Price trades into supply, reacts, supply fails, we break higher, supply flips to demand. So it's just a matter of being patient, letting price trade back down into that supply flip to demand, right? And then getting that continuation follow through to the upside. All right, so just be patient on this one. It ought to retrace into at least equilibrium, discount for continuation. And the same really applies to GBPAUD. Obviously, those two are nicely correlated, right? So we want to see this thing push lower, right, into supply flip demand, right, for continuations higher, into our POI, which would run out all of the buy side liquidity resting above these highs and these highs, trade up into supply up here. All right, so we have lots of liquidity that obviously the eyes are on, right? We're going to target, right? But we don't want to be buying, getting in at premium. We want that nice discount, right, with the liquidity left intact so that we can target, buy into that liquidity. All right, so it's a very similar setup there on GA. Really across the board on these pound pairs, right? So GBP Swiss franc, same deal, right? Significant sell-off, push higher, right? Higher low, higher high, ran out supply here, right? So supply has been invalidated. Clean, smooth break of structure in my opinion. All right, so I'd really like to see price trade down into, again, discount, same type of level, right, for that continuation higher, ultimately targeting all of the highs within this trend line. All right. So pretty good looking setup here on GBPCHF. It's just a matter of patience, guys, patience. Right, nothing extremely pertinent at the moment, right? But we have our levels and we're going to stick to those, right? And they will come around and we'll execute, right? And your patience will provide the most return. All right, EURAUD was given out last week, right? Beautiful entry, just off of simple demand following market structure, right? Simple demand, discount, continuation. Right, so nothing in terms of the here and now, just wanted to highlight this and congratulate you if you paid attention and caught this move, 250 pips to the upside. Make sure you take partials or close out your full position after having run out this high. All right, but that wraps it up for this episode. I hope you took value from this as usual. We really love to do these episodes and appreciate your feedback. If there's pairs that you guys want covered, I can certainly take a look at in the following weeks. We are flexible, but again, we do kind of try to stick to the Forex pairs. Don't do much in terms of indices or commodities, but maybe we can shake things up a little bit here and there. All right, so I hope you have a great remainder of your week, short week. As usual, use good risk management, and we'll talk to you again next week.